Okay, so today we are looking at lecture 3, and the emphasis will be on distribution of national income. So first we want to know what national income is, and then how it is distributed, okay, within a country context. Okay. So what we are talking about here today is the national income of the entire country, okay? So which takes us from the field of micro economics into the field of macro economics, okay? And the key difference here is when we talk about micro, we are talking about income or decision levels at household levels and business levels, okay, where somebody is asking themselves, how much resources do I invest into a business to make profits? And I mean, what investment do I make? What purchases do I make at the lower level, household level, business level? But when we get to macroeconomics, we are talking about questions, or we are asking questions like, what is why the economy is going through cycles? Okay, what are inflation rates like in the countries, import and exports in the countries? We are looking at a GDP. We are looking at employment rate vis-a-vis unemployment rates, and what government could do, okay, when unemployment rates are high. Okay, so that has to do with what? Macroeconomics. Now, moving on, we want to look at the concept of national, okay, income. Okay, and basically sometimes we want to refer to that as national income accounting, because we are trying to account for the income of the entire nation. Okay, good. Now, just a moment. Okay, so here in national income accounting, we are referring to measurement of aggregate economic activities, okay? And that is so aggregate economic activities like total export, total import. We are looking at total agricultural crop, okay, produce. We are looking at total services, number of people employed, national mortality rates. Okay, so we're looking at the measurement of aggregate economic activities. Okay, aggregate means we are finding an average or a statistic to measure some economic activity within a particular country. Okay, good. Now, we come to a the very important concept or statistic, okay, which is used to describe the national income, and that is the GDP. GDP simply is the gross domestic product, okay? And basically what it does is it measures the income of the country, okay? So we usually use this as a standard of measure to check the national income, or we call it the national income, okay? Now, it is defined, okay, as the total market value of all final goods and services produced within a nation's borders in a given time period. Okay, so you take note of the key words. The first word is, it is the total market value. Okay, the total market value of what? Of goods, goods that are produced, and services, okay, which are produced within a country's borders. So in the context of our country, we are referring to goods and services produced within Ghana, okay, within a period of years. So if we have to calculate the GDP for 2020, then we are going to look at the goods that are produced in Ghana and the services that are produced in Ghana okay, for the period 2022. That is what we are talking about. Okay, so that will give us the total market value of all the goods and services which will be produced within Ghana, okay, this year. That is going to be the GDP for 2022. Now, so we are saying that it measures what? The total income of everyone in the economy, okay, together. So it measures the total income of everybody in the economy. It also measures the total expenditure on the economy's output of goods and what? And services, okay? So total expenditure, how much we spend, okay, on our economics output of goods and services. So in as much as it's looking at the income, it is also looking at the expenditure, okay, on the economy output of goods and services, how much we spend, okay, as a country on goods and services. That's what we are saying. Now, so in short, what we are saying is then to a degree, income that is spent is equal to the expenditure, okay, of the country, because what you have is what you spend, okay? And in very basic terms, I'm going to explain this as, for example, when we spend some money, okay? When we spend some money in purchasing a good, okay, from a market woman or from a business, that money we have spent as a consumer becomes an income for the seller. Okay, so the money you have in your pocket was used in purchasing the product or the good or service that was produced by what? That business. Okay, so that money of yours which you have spent, which is your expenditure, becomes the income of the seller, of the business owner. That is what we are saying here. So which means that then we can examine what? The income of a country, because there is interaction between consumption and what? And production level and then consumption level. So which means that we can look at what? Our GDP from an income perspective, and we can also examine the GDP from an expenditure perspective. Okay, so please give me a minute. Thanks for your patience. Yeah, so we want to explain the key words again for us to really understand. We said total market value means the dollar value of every one of the goods and services produced during the period of time. Now, final goods and services means that sorry, there was noise in the background. So we are saying that total market value means, okay, the dollar value. In our context, that's going to be the city value of every one of the good or services produced during a period of time. So if we are looking at total market value in 2020, okay, then we are talking about the total monetary value for all goods and services which were produced within the year 2020. That is what we're talking about here. Okay, then again, we talk about final goods and services, mean that production is only counted in the final stage. Okay, so we are talking about final produce or final services. Okay, so if it is a product like a car engine is not a final product. Okay, so in the manufacturing of a car, the car is the final product which is manufactured. Okay, so the cost or the value of what? The monetary value of an engine of car is really not included when it comes to calculating the GDP, okay, because that is going to be incorporated in the when the cost of the car itself is being valued. Okay, good. So yeah, so for example, I have this is to keep things such as a car engine from being counted twice. Okay, if you count it, then it means that when you are selling the car, you see the engine is also part of the car. So if the car is going to be costed in a GDP, then there is no need costing what the engine of the car within what our GDP. Okay, then we talk about two key terms which I'm going to look at in the next class. Okay. Yeah, so the gross national product, okay, refers to outputs produced by, here we are going to have Ghanaian owned what factors regardless of their location, okay? So as against GDP, which looks at what goods and services rendered within the borders of Ghana or within the borders of a nation, the national gross product or the gross national product refers to services and goods that are produced, okay, by that nation or the nationals of that countries, okay, regardless of where they locate themselves, whether in Ghana or outside Ghana, maybe in Nigeria. There's a Ghanaian person who's running a business in Nigeria. Okay, good. That impact or the total value, monetary value of produce, okay, for Ghanaian owned companies in Ghana and elsewhere are captured in what? GNP, okay? But when it comes to GDP, we're only talking about what? The monetary value for goods and services produced within the borders of the nation. Now, so that brings the key point here. We are saying that GDP is geographically focused. Okay, it is geographically focused, including what? Output produced within the nation's borders, regardless of whose factors of or what factors of production are used to what produce it. Then we also have another measure, which is the GDP per capita. Okay, the GDP per capita is basically the GDP, okay, divided by the total population average. So once we find the total income of a country, which is the GDP, and we divide by what? The total population, then we get what? A kind of average GDP, okay? That is what we refer to as the GDP per capita, okay? So that amount will tell us the amount of money each person within the country, okay, is entitled to or has. The income raised by an individual in the country within that particular year of reference. That is what we are talking about. So the GDP per capita gives the total income of an individual in a country. So another point here, we are saying GDP per capita is commonly used as a measure of a country's standard of living. Indeed, if I want to compare or I want to find out how the country is performing in terms of standard of living, okay, then I want to compute first of all, the GDP, and again, the GDP per capita. The GDP may not be a true reflection, okay, because if we find the GDP, it's for the entire population, but we know that the population is not constant. Currently, we are close to what? 30 something plus, okay, million, okay, in this country, as vis-a-vis about 10 years ago, where we're just around 15 to 20 billion. So if we calculate just the GDP, okay, for each year, let's say we find the GDP for 2020, GDP for 2021, GDP for 2022, and then make inferences based on the GDP, that will not be a true reflection of how the economy is growing, okay, or of the standard living in the country, okay? But the GDP per capita gives a true reflection, okay, of the standard of living, because it divides the GDP by what? The total number of people living within the country. In very basic terms, what I'm saying is, if you find a GDP and it's increasing, even though it's increasing, the population size is also what? Increasing, okay? So if you want to find the true trend or the true pattern, the true income, okay, which will be used to measure the country's standard of living, then it will be important for you to divide what? Your GDP per the population to get a true measure or a more reflective measure. We are saying that, however, GDP is not an accurate measure, okay? It's not always an accurate measure. So we are saying that it helps us to quantify the income, okay, within the country. Why? Once we get income, we know that we can do a lot of things, okay? And it's been shown over the years that even the GDP correlates with a number of economic variables. Even, for example, when you talk about life expectancy positively correlates with what? The GDP of a country. So the better your GDP, the higher your life expectancy. You understand? Yeah, so we have these measures and this correlation, but we are saying that this measure does not really give us a true measure of what is happening in the country, because you cannot use GDP to measure the satisfaction level of people, okay, living in the country, or how happy people are in the country. You understand? So GDP cannot give us a true reflection of everything happening in the country, even though it is a very important index or measure of the standard of living of people within the country. Now, there are certain things or certain measures which are exempted when we're estimating the GDP, okay? The first point is still the definition. We want to still have the definition at the back of our mind. The three major exceptions when estimating our GDP are: one, okay, non-market activities, because we are saying that this should be what the total market value of final goods and services produced. So if there is a non-market activity, for example, you bake, you're a baker, okay, the business bakes. However, the baking you are doing at home, okay, is to bake bread for people in the house, okay, only, not for monetary purpose. And it is also not being taxed, okay? So for such an activity, it is not, there is no value to it. There is no monetary value attached to that. Hence, it is not included in what the estimation of the GDP for a nation. Then again, we have unreported incomes, okay? So sometimes there is challenges identifying people who are doing more than 2-3 jobs, okay, to even report the amount of income that they are taking, okay, within the economy or within the country. Then we also have intermediate goods. We said that GDP should be the total market of final goods. So an intermediate good, okay, will not be recorded in the GDP. Now, we want to look at the next point. We said it should be of final goods and services. So I'm just starting on the definition again. Final goods and services. So which means that this will include tangible goods, okay, tangible products like our malt, like the DVDs, like the cars, like the beers, and so on, forth and so on. Then we also have intangible services like dry cleaning, like concerts, like cell phone services, all these mobile communication services, okay? All of these are intangible what? Services. And these are included in the final goods and services. Then the next point has to do with the produce, okay? And when we talk about produce, we are talking about produce limited to that particular year. Sometimes we estimate within a year or on quarterly basis, okay? So when we are talking about a year on a yearly basis, then we are talking about only goods and services rendered within what? The year. Okay, so let me go to the next point. Then we also talk about the limitation to the country's borders, okay? So everything that is produced should be captured in the GDP. Sorry, everything that is captured within the estimation of the GDP should be goods and services rendered within what? The scope of the nation's what? Borders. Very important. And it does not matter whether it is being produced by nationals or non-citizens, okay? But as long as it is being produced within what? The borders of the country, then we can include that income or that expenditure in the estimation of what? The gross domestic product. And the period of time, we've already talked about that. GDP is usually estimated within a time period and quarterly period. Now, we have a set of questions and activities here, and I want you to identify whether this set of activities, okay, constitute or can be included within the estimation of a nation's GDP. So carefully examine them and then give me a feedback as to whether these items So as I was saying, I want you to examine these activities by our explanation so far, okay, and determine whether these items can be included in the estimation of GDP for a country. So I'll take your responses. You can raise up your hand to give me your response. So let me take your answers. Yes. Can I get answers from the class? Oh, class, can I get some feedback? I'm unmuting you. So let me get some feedback. Question 1. A parent that stays home to care for a baby. Yes, Chris.
Sir, please, no.
Yes, the answer is no. Then the next question, we have dinner at a restaurant. Dinner at a restaurant, Ebenezer Fori.
Yes.
Yes, that's correct. Dinner at home. Dinner at home. Can we have another person answer?
No.
No. Yes, you're right. Social security check.
Yes.
Someone says yes. Is it really a yes or a no? I think it's a no. Now, a haircut. 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 Hey, class, you are quiet, so I've unmuted you. So I expect you to open and then answer. Let me have, yes, Aqua.
Say yes.
Yes, yes. So the haircut is yes. That is if you go to a barbering shop, right? The barbering shop will end up paying taxes and levies to the country. But if you are barbering yourself, then it is no. Okay.
So
Yeah.
in this case, it wasn't specified. So is
Yeah,
it
it
yes or
wasn't.
no?
Yeah,
Because-
so you need to explain. That's what I'm saying.
Okay.
You have to. So when you say no, you have to explain, and why yes, you have to explain. So construction of an office building. Yes, Esther. Esther, construction of an office building. Hey, is Esther in class? Okay. It appears Esther is not in class. Josephine. Josephine. Okay, Josephine, your network is poor. Okay, that's fine. Then so let me just give the answers to that. Let's move on a bit quick. So the first one, parents stays home, no. Dinner at a restaurant, yes. Dinner at home, no. But yes, on what? Groceries, okay. Social security checks, no. Haircuts, yes, unless you did it yourself. Construction of an office building, yes. Then sales of 10-year-old house, no, because it's already been included, okay, in the GDP 10 years ago. Then an oil change, yes, unless you did it yourself. If you send it to the mechanics, you pay some money, okay, and once you pay the money, it becomes what? Income to the mechanic, who will be charged, okay, and that money will also go to the government for further expenses. So a new car, yes, once it's new, it will be recorded by what? The car manufacturing company. Then once you sell it, you put in inputs for the company, who will also be taxed for the government to get money. Okay, then we have tires produced by Ford to put on a new car. No, okay, because that would be double taxing, or double what? Entry. So tires or engines are all unfinished product. They are intermediary products. Okay, we are talking about final products and final goods and final services. Okay, now we're going to talk about. I'm not seeing this my head. Okay. Yeah, so we've talked about non-market activities. Okay, we already did mention that GDP excludes goods and services produced that are not sold in the market. I think that is very clear from our previous explanation. So there are more examples on that. Then again, unreported incomes too. I did explain to you, okay? So GDP statistics fail to capture market activities that are not reported to tax or census authorities, okay? So once the business is not registered, okay, it is not taxed, and it is not captured in the GDP, okay, or once that business is not taken by census authority, whichever ever body is responsible for that, then you are actually hiding. It's an underground work, okay? So that is not reported. Then we're saying that underground economy is motivated by tax avoidance or to conceal illegal activities. Okay. Yes, indeed. So the main motivation behind what underground activities, economic activities, is to avoid what? The payment of taxes or to conceal what? Illegal activities. Yeah, then we also talk about intermediate goods. We've already mentioned that here in GDP, we are talking about final goods and services. So hence, we cannot include intermediary goods, okay? Else, we'll end up what? Taxing them twice, or we'll end up recording them twice in the computation of the GDP. So here we say intermediate goods are goods or services purchased for use as an input in the production of final goods or services. For example, the engine or chassis of the car are not counted so as to keep them from being counted twice. Okay, so in other words, we mentioned that your expenditure becomes what? Another person's income, okay? Which means that which basically means that we can also look at GDP from two areas, okay, or two sides, where we are looking at the demand, okay, demand in terms of the expenditure, okay, and then we also look at the supply side. So we also look at the supply side, which looks at the income. So what we mean is I need a product, okay? So once I need a product, I'm going to spend money, okay, to purchase that product or that service. So my demand, okay, can help my demand, okay, the demand of people within the country or businesses within the country or the government, okay, could serve as a measure, okay, of the GDP. At the same time, you see, like I explained, once I take money to purchase that demand, then it means that that is the amount of money I have, and that money becomes what? The producer's income, okay? So if we want to find out the total income generated within the country, then we are looking at the supply angle, which is from the production point of view, okay? So those who are producing or supplying services, okay, their income could also serve as a means to compute what? The income of a country based using what? The GDP. Yeah, so basically what we're saying is the value of the GDP can be computed first by adding the expenditures of market participants. Okay, that is total spending. So when I talk about expenditure, I'm talking about what? Total spending. Okay, good. And that is estimated using the formula GDP is equal to C plus I plus G plus what? The net export, which is what? Your X minus IM, which is import. C means consumption. Okay, I means investment. G means government purchases. And then X minus IM is your net import. Okay, usually written as XN. Okay, and X represents your import, whilst export, sorry, and then IM represents your import. Okay, so on consumption, we are saying that we are spending money to consume. Okay, so that is expenditure. Investment, we are spending money to invest. So that is also expenditure. Government purchases, we are spending money to what? Purchase. That is also what? Expenditure. And then when it comes to net export, we are spending money to export, okay? And we are spending money to what? Import. And then we're also obtaining money to export. So at the end of the day, when we subtract our imports from our export, then we can have the net import, the net export, okay, which will represent a true reflection of expenditure. Okay, so GDP is equals to the consumption plus the investment, plus government purchases, plus net exports, okay? So we'll take our time to look at what consumption is, what investment is, what government purchases involve, and then what we really mean by net export. Okay, when we talk about consumption, okay, so that will be after the income perspective. So once again, like we said, aside expenditure, we can also look at the GDP from the angle of what? Income. Okay, so if we're looking at GDP from the area of income, then we are looking at GDP is approximately equal to what? Your wages plus your rent plus what? Your interest plus your profit. Okay, so here we are talking about the income. Yeah, so when somebody expenses money, it becomes the income for another business person. So if it's in labor, okay, we have workers of a company or workers in the country, we are looking at their total wages, okay, plus the rent, okay, the rent for houses, for accommodation, okay, so rent, plus interest is, okay, interest, okay, on loans and other capitals. Okay, then we talk about profits, okay, by businesses or entrepreneurs. Okay, so once they have businesses, they can profit from that. So if I want to look at the total income, then we can look at it from the wages aspect, plus the rent, plus the interest, plus profits, which is accrued over the period. Yeah, so basically we're saying that then based on the supply and demand, we can also look at product market and factor markets. And based on that, we can say that then the value of outputs will look at consumer spending. That is, we are looking at expenditure point of view. Okay, we are looking at consumer spendings, investment spending. We're looking at government spending. And the net export feed into what? Product markets, okay? Yeah, that is what causes a market or gives us market, because once we are spending, if there is a market and there is no spending, then there is no market. Yeah, so this feeds into our product markets, okay? Then we also have factor markets, okay? So factors, once somebody is working for you, you have to what? Pay this individual. Okay, once you've invested in the bank, there has to be a profit, or into businesses, there has to be a profit per the very fact that you are producing a lot of things and services. Then there should also be interest based on your investment, maybe in various sectors in the bank, investment in shareholdings and all that. Then we also talk about incomes due to rent, okay? Factor market is reflected through these indicators. Now, between your spending and your income, we also have what we call as depreciation, okay? So there is always a depreciation on some of the produce. For example, you have buildings that are going to be depreciation on some factors, okay, along the line. Sometimes due to inflation and other economic conditions. Okay, let me skip this for now. I want to explain the concept of consumption. So we have what we call as goods and services used by households are called what? Consumption goods, okay? Now, is the total spending by households and on goods and services. Now, please give me a minute. Yeah, so we are saying that is the total spending by households, okay, within the country, within the nation on goods and services. And this could come in various forms in terms of housing costs, that's rents and other purchases. Now, there are some more facts here on rent, but I'm going to skip that. Then we also talk about investments, okay, which is I in our formula. Okay, that is GDP equals to C plus I, okay, plus G plus what, XL. So here we are on investment. We are saying that investment is total spending on goods that will be used in the future to produce what? More goods. So investment is